Some have declared this to be the end of the 40-year bull market in bonds. We have seen market intervention beyond anything to compare to in history, and certainly the suppression of everything has taken its toll. While central banks consume all assets slowly over the years, the public has been irrationally demanding more and more activity from the central bankers. If the fools only knew what their true objectives were. You came here for the truth, so let me unveil that for you. Today we're going to talk about the bond market, give you some updates on that. We're going to look at what the Federal Reserve had to say. You're probably already aware, of course, of the SLR and what they had done. I really thought it was going to go a different direction, but anyway, we'll talk more about that. We're going to look at margin and what's happening with this. Of course, people using more and more. There's more debt. There's more everything. Today, we're going to look at all the craziness of 2021. So let's begin. The 40-year bull market in bonds is over, and the implications are profound. Here we have a quote that might be of interest to you. 2020 marked the secular low point for inflation and interest rates. New central bank mandates, excess fiscal stimulus, including UBI, less globalization, fading deflation from disruption, demographics, debt. We believe inflation rises in the 2020s and the 40-year bull market in bonds is over. That's Bank of America Global Research Inflation Survey showing 61% of analysts saw their companies raise prices in recent months. Oh no, wait a minute. It doesn't matter. I was told many times before. If the products start to increase in price, you don't have to worry. That wouldn't affect the consumer. I don't know what kind of world these people are living in, but if the raw materials, for instance, cost more money, they're just going to make the customers pay more. They're not going to take a hit on the profits. It's just not going to happen. You can absorb a shock sometimes. Okay? These companies, certain things happen in the supply chain all the time. They take that shock. Okay, let's just move on with it. We write it off. We move on with it. But you can't do that if the prices are going up and up and up and up, and it's going month after month and then into the next year. At some point, you simply have to take it and say, look, it's going to be more expensive. Or you do that whole shrinkflation, the way that they love to do. You know, it's the bag of chips that continuously, the contents continuously get smaller. Maybe the bag is the same size. And this sort of thing that you're seeing all over the place. Or it's still that same product, but the quality is diminished more and more and more. You know, you look at the toilet paper, you could see right through it. Used to be like a towel, and now you could see right through it. Same with the paper towels and all these things that are just getting thinner and thinner and thinner. And they're doing this because they have to cut costs. And why? Because the raw materials are getting more expensive. And this is just an example, but I'm just trying to show you how this is very real and it has its impact on the consumer. AA, asset allocation implications: bullish real assets, commodities, volatility, small cap value, and bearish bonds, US dollar, large cap growth. So this comes from Bank of America, and I wanted to bring it to you. People are always asking me, well, what do we do with our money? Well, Bank of America seems to have the answer for you. I think that it is wise to look at real assets. I'll say that. And I believe that this is something that is, anytime you have inflation, you're always going to have real assets that do well. Even if everything does bad, usually the real assets hold on to more of that value. Now you can look further into this. They talk about more of the bonds. I've got some more information to show you, but this is the place where I would start. Barclays US Treasury Total Return Index. This is, over the past several years. In fact, the chart goes back from 1980, and you're just seeing what has happened. This has declined over that period, 2020 into present day, and it is very clear that, at least for the time being, we'll see, but this is apparently true. The bull market in bonds is over. Turning attention over to the Federal Reserve, the Fed won't extend relief for banks from key capital rule. I talked about this in a previous video at some point, saying that I think, just like always, the Federal Reserve will extend and extend and extend. But starting April 1st, the nation's biggest banks won't be able to exclude treasuries from the calculation of the supplementary leverage ratio, the SLR. Very shocking to me. Now, it went on ridiculously long to begin with, and this is an extremely dangerous policy as they have it in, but the way that they were proceeding, it looked like everything was status quo, nothing's going to change. So this is something that truly upset the market. A little more detail here. You can see the relaxing of the so-called SLR allowed banks to exclude treasuries and deposits from their reserve requirements. So they're trying to make it easier and easier. That's the whole policy here. Let's be clear. It is still today extremely easy, okay? Let's not make it seem as if they are really restricting at all. But to have this at zero, that's the goal, because it's just risk on, pedal to the metal kind of behavior. And this is just a slight change. That's what it is. But the market doesn't want to see that. The market wants to see a complete destruction of any structure that was in place. This is the actual press release from the federalreserve.gov. You could see it's dated March 19th. Federal Reserve Board announces that the temporary change to its supplementary leverage ratio for bank holding companies will expire as scheduled on March 31st. If you want to read what they actually wrote, this is the document you need to read. Links will be in the description as always. But it's not just coming from the central banks. The governments around the world have done their duty in order to make sure that the future generations will have less and less and less. And you do that by stealing from the future to bring it to the present. Sleepwalking to bankruptcy, the U.S. twin deficits, U.S. fiscal deficit and current account in the U.S. $1 trillion. You're looking here right now, and by the way, it does not include future infrastructure stimulus, which is planned. Okay, we're talking about trillions coming through still, and you're just seeing how unbelievable this has been. Now, you're not going to be able to see all the numbers here, but let me try to get you an estimate. This right here would be $3.5 trillion, and that is for 2020. The estimates, of course, growing for 2021 and 2022. And it's just absurd because there's no way they can pay this back. So what do? Well, you have one very real option. The Federal Reserve can buy it all. If you want to know what the Bank of Japan is doing right now, I mean, it just keeps getting worse. They are willing to do literally anything. Nobody is putting their money in Japan now today, and they are just pretending, literally they're just pretending as if everything is totally fine. They are buying the entire market, the bond market, the ETFs, they're buying the REITs. Everything is being bought by the central bank and the two biggest buyers, the central bank and the pension fund. That is unbelievable to see how far they're willing to go, and they just won't give up. They just won't admit failure at any point. Maybe it's a cultural thing. I know some places this is how they act, and they just won't say, okay, let's just realize that this didn't work and we're just going to stop it here. Let's reset. Let's try to do it orderly, and we'll be able to move on into a better place. But that's not what's going on in Japan. In fact, they're willing to go all the way down into the ground. Now, you can read it in here where they actually say, well, some people say that we can't go more negative, but we will if we have to. I mean, that's how crazy this has become. If you want to read the excerpt for yourself, I just, it's just nonsense at this point. The WTF change in margin debt from a year ago. The risk is on. And why? Because you've got central bankers doing what they do. You look at the governments. They're pumping up the money like crazy. Does anybody even care at this point? Of course not. WTF spike in margin debt. You're looking at this in the total. It is exceeding $800 billion right now. And that just gives you some insight as to the actual numbers, the actual data behind all of that, and how crazy this has become. The risk on mentality, it's okay at certain times, but not to this degree. It's never going to end well because we always hit a peak and then things tumble down. This is a really interesting one here. I want you to check this out from Goldman Sachs. If you have the time, I would definitely take a look. An unexpected surge in demand and shipping delays has caused supply shortages for a wide variety of products. So on the left-hand side, you're seeing the commodity or product, and then you can see the details specifically as it relates to that. And, it's all over the place. And if anybody has been building a new house or doing renovations or know of somebody who has, or maybe you're in one industry or another, you know that the price of so many different things has gone up. And the whole point here is that it's not just one reason. Okay, there are so many different reasons. And ultimately, all I care about is what do people have to deal with at the end of the day? Yeah, they're dealing with higher prices, whether it's semiconductors and autos, whether it's headphones and game consoles, plastic parts, steel. They go into boats and seafood and cheese and everything. Everything is going up. The supply disruption creates a little bit of panic, and you're noticing this all across the board. So watch out with inflation and watch out how the market reacts to it. Supply chain disruptions are creating production problems for a majority of manufacturing businesses. And here you can see the share of manufacturing firms that have experienced supply chain disruptions. And they're just giving you from the different, this one on the left here is Kansas City Fed, New York Fed, Atlanta Fed, and the Dallas Fed, all showing you that there have been significant delays and disruptions in different areas around the United States. I've talked about this issue in previous videos, and although I don't have time to get into it, this is an entire video in itself. This comes from Rabobank, and this is talking about the super cycle in commodities. Supplies shaken, not stored. For key feed and food commodities, the message for markets and institutions is a simple one. They are going up. Okay, they made that very clear. And so you could see right here in this chart, this is the S&P GS Agri Commodity Index. Okay, this is the commodities index essentially. And clearly, it has been rising over the past several months. And you're looking at this on all the different charts. Basically, you can break it down by commodity. You can look at the different indexes. And in general, they're moving higher. Looking at this chart right here, it's showing you the meat and cereals and sugar and dairy and oils. Of course, same situation. Look at it all over the place, okay? They break it down. They give you the examples, the reasons why there has been all of these price spikes and so on. Exporter stocks have fallen rapidly to a 7-year low. China is importing on a vast scale. It's hard to increase supply rapidly. Adverse weather conditions, and it goes on, okay? So this is something that people need to watch out for. Of course, it's going to hit the bottom 50% harder than anybody else, but this is really key because of how much of an effect it has. We already have so much civil unrest that is brewing all over the place, and this is yet another hard hit to those people. Don't worry though, the jobs will be there to help everybody out, just like this situation here. Ford to offshore $900 million plant investment from Ohio to, check it out, Mexico. That's right. What do you do when you get a bailout? Well, what you do is you take that money and you open up factories in other parts of the world. What do you do when you're paying 0% taxes? Oh, that's right. You take that money that you had, the corporate profits, and you open up factories on the other side of the world. It's not Ford. It's not GM. It's not Chrysler. It's every company that can get away with it. If there is an option to move offshore, they're going to do it. Too many regulations, there's too many rules, there's not enough profit in it, and that's what corporations are fighting for. More and more profit to appease the shareholders. This continues story I've been covering for a while. Goldman Sachs seeks volunteers to move to West Palm Beach digs. So they're one of many companies that are moving south in order to, diversify out of New York. And that is something that is going to affect the main areas where, they were a mainstay just a year and a half ago, let's say, almost basically a year ago at this point. And you're looking at how many businesses, how many individuals are maybe not necessarily just Florida, but Florida's been the biggest beneficiary. There's no doubt about that. But regardless, people are looking for, lower expenses. They're looking for trying to benefit their businesses and so on. This is just one example. And now for another what the heck is going on GPS. You can see right here, virtual land prices are booming, and now there's a fund for that. I never consider myself to be that out of touch, but when I read about these things and the NFTs and so on, I really did feel out of touch. Does anybody know an in-depth resource for what's going on here? If you have anything to share, please put it in the comments. Digital, or as they call it, virtual land. So no longer the most important thing about land that it's real is I don't have any words for this, okay? I don't have any words for this. If you do, please put them in the comments below. I'm going to end the video there. If you found it informative, hit that thumbs up button. When you do, you're supporting me. Thank you very much. If you want to learn about e-commerce, you want to sell stuff online, make money online, you can do so right here for free at the AmazonGPS.com. Do you want to understand the financial system from top to bottom, A to Z, have it all explained to you very easily? Well, then you can learn in my 2 books. Definitely check them out at the link in the description. And if you want the audiobook instead, themoneygps.com. Hold on a second. Wait. Have you seen this video? If not, you absolutely need to check it out. Click it and I'll see you there.